This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over the data sets and doing a very quick technical analysis for the SPY for February 17th, 2026. And with that said, let's go ahead and jump straight into the data. Now, again, there's really not a whole lot of data for Tuesday. We pretty much only have the ADP weekly employment change and the New York manufacturing index. The New York manufacturing index will not move the market at all, really, but the ADP employment change weekly definitely can, especially if we get an extremely low or high reading. But for the most part, everyone kind of has the expectation that's going to pretty much be holding around that same level of just above the the neutral, the zero. Um, Other than that, really not an interesting day for the data. The big data sets come later in the week on Wednesday, Thursday, and Friday, especially Friday with the PC data and the GDP data. So looking forward to that, but tomorrow, not a whole lot of data.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And I said this video was going to be quick, so with that said, let's go ahead and open the daily time frame, the moving averages, and the Bollinger Band so that we can go over what the anticipated price action should be for tomorrow. So I'm going to preface this video before even going into the moving averages and everything is that the VIX, the VVIX, the one that I tell everyone to track it all the time, is extremely, extremely elevated. So if we open tomorrow and this remains elevated and continuing upward, then that's going to allude to the bearish thesis, which is very likely what will happen today. So with that said, going over the SPY, we have the 5 mile currently well above us, but it will be pulling under the 10 mile and the 20 mile. Currently, the overnight price is at 678.88, so basically that's 679 range, roughly about $3 underneath where the market closed on Friday, which was at the 681.75, so almost that 682 range. Sorry, it's really hard to talk tonight for some reason. Now, with that said, we are extremely, extremely close to the lower Bollinger. We did not secure this level as of Friday, so we did not trigger the lower Bollinger mechanics. Very, very likely based on where the overnight price is and everything else. Extremely likely we push down towards that lower Bollinger. Currently, the lower Bollinger is at 677.74, so that means we should be pushing below that level, or basically at that level or below. And again, on open tomorrow, the lower Bollinger will pull lower, so just make sure you mark down that level exactly. It'll probably be around the 675-ish range, 676 range. So still about $2, $3 underneath the current price. If we are going to tag that lower Bollinger move, we will push, well into that range, secure that level at the close, and then as of, the standard lower Bollinger moves, we will get a day two lower low from that on the lower Bollinger day two. That's when we can start looking for some of this reprieve to the upside. Now, we do have a few very important gaps here towards the downside. We do have this 675.77, which that's pretty much right where that lower Bollinger will be. So that will close an inverse cup to the downside. And with that inverse cup closing, we can have a smaller inverse handle pushing upward and then pushing further downward. Now, the next gap under that is at 669.22, so roughly a whole $6 underneath that previous range. Um, if we're going to have the lower Bollinger day one, very likely tag that first gap. Day two, it push us very well within to that second gap. Um, and from there, then we can start looking for some upside reprieve, even if just momentary. Again, from the lower Bollinger Day 2, generally we will see upside consolidation to the 5 mile, as the 5 mile will be pulling down towards the market price. So even if we pull down towards this 660, the 669 range, then the 5 mile will be continuing to pull closer to that range as well. As we push into the lower Bollinger Day 1, Day 2, Day 3, Day 4, very likely on that third or fourth day is when we start pulling upward towards that 5 mile level. So that's really what I'm looking for the bearish thesis, based on the overnight, based on how elevated volatility is, based on seeing, excuse me, based on seeing the long-term bonds picking up a lot of weight overnight. Um, a lot of signals are telling me right now that this is continuation of the Bank of Japan unwinding positions. Let me go ahead and check FXY really quick. We do see FXY continuing to climb in the overnight. So, um, again, we're seeing a lot of this unwinding from the Bank of Japan, which is why it really confused me at first. I don't want to say confused me because, this was a situation that we did discuss very, much in detail. So we're not seeing the US credit market sell off, okay, which is telling me that very likely this Bank of Japan selling will be bought up. So even though things are extremely bearish in the current sentiment, um, you know, wait for those lower Bollinger Day 2s before you start trying to buy calls into the upside. However, a lot of the US instruments are telling us that very, very likely we are going to be seeing upside after all this selling is really pushed out of the system. We have not been seeing a lot of that selling tracking within, the high yield credit, within the institutional grade credit, just all those different high yield corporate credit ETFs and everything. We haven't been seeing those shake just yet. And because those aren't shaking, it's telling me that so far, um, very likely American institutions will try to buy this dip up when everybody's done selling. So that's the bear thesis. And to kind of continue on this point of the bear thesis is that we do have, and let me go to the actual SPY, is that on the SPY, on the hourly time frame, we do have this head and shoulders forming. So very, very likely. And let me see if I have a bunch of crazy drawings. I do. I apologize. These are just different liquidity zones. As you can see, this is that inverse cup we've been talking about. We have this head and shoulders right here. Very, very likely this is the head and shoulders that will take us to that 675 range. We do have a gap all the way to the basically 670 range. So just be aware of that. We do have a lot of room down. If we're going to continue downward through this liquidity channel and not find support right here, then the downside, again, is pretty significant right now. I'm losing my voice. Sorry about that. But there's still roughly about a whole $7 to $12 downside from this move. Now, I'm not going to be trying to chase calls into this. I'm just going to allow the market to push into the lower Bollinger. Once we get into the lower Bollinger Day 2, then I'll be, excuse me, I'm losing my voice. I apologize. My daughter's sick right now, so I feel like I'm very likely getting what she's getting. Anyway, from that lower Bollinger Day 2, we will look for bullish structure at the bottom of this cup. Now again, this can push down quite a bit. Um, this little cup right here extends pretty far down. Once we really start closing down or closing out this larger inverse cup to the downside, we can start pushing down a lot further. Likely we'll pull upward prior to that, build some liquidity, then push downward. But again, we do have a very bearish structure right here in that circle right there. Um, Everything about this structure tells us that very, very likely the market's going to be pulling downward. And, you know, don't try to catch that downside with calls just yet. If you want to short, plenty of room to short. The market might try to pull upward prior, and this does kind of tie into the bull thesis as well. But with the 5 mile above us, currently it's at 688.21. It very, very likely will be pulling down towards that 685 range. So it is above us by a whole $6. So technically, the market can pull upward, test that level, reject it, and then push downward for much more liquidity for that downside. So there's a lot of structure here, really suggesting bearishness. Now, we did have a lot of bullish structure here. Potentially, we had, this potential cup right here forming, potentially a handle, pushed down a little bit further than we anticipated. But again, this could have been a double bottom. We were still within this liquidity channel, and this was still holding up as a cup and potential handle. But with the selling further down, that will kind of invalidate this entire structure of upside, showing that it all along was just a very, very large and confusing inverse cup to the downside. So we do see the ADL. Sorry, I'm losing my voice. We do see the ADL pulling downward pretty aggressively over the last few sessions. Again, this is a very important indicator. The ADL is basically like a bank account. If it's pulling down, money's leaving the symbol. It's moving up, money's entering the symbol. So again, very, very important to watch over. Now, we don't have a whole ton of data tomorrow that can kind of drive the market to continue the same trend that they were positioned into over the last few trading days. So with no real major news to shift the narrative, um, this again, there's a lot of reasons why this can be bearish, but in the long run, I'm still bullish on things. Um, but I still want to see, a lot further downside push before I get, bullish to the point where I'm starting to buy tech dips and things like that. Currently, I'm focused on a lot of the precious metal dips. I'm still very, very heavily invested in buying silver up. Hold on, I'm trying to pull it up. I'm just a blind man. I'm still buying silver up now. Granted, you do have this potential inverse cup forming here, but I want you to think about something in terms of just how market trades. Okay. And I do just want to delete all these random drawings. Okay. So I want you to look at this almost as if it's straight across. Okay. What does this like to trade it above? Does it like to trade above the 20 ma for the most part, or trade below the 20 ma for the most part? From what I can see, silver likes to trade well above the 20 ma. And we can go to the actual futures and, let me go ahead and check gold really quick. Turn off the drawings. Even for gold, you can see that it is just clinging to this upside. It is clinging to the upside of the 20 ma. Overall, it really does want to push upward and continue holding that upside. So, can we push downward to the lower Bollinger? Absolutely. There's a whole roughly $300 downside on gold. It's actually slightly higher than that. It's about 350-ish dollars downside on gold. However, what's the upside? Okay. The current upside from where we're at right this second on gold is, not going off of hypothetical levels or anything else, just previously where we traded at is a whole $600 above where we're trading currently. So the upside risk is a lot less than your downside risk here in terms of buying the dip. Now, yes, you can see this pull down, again towards that lower Bollinger, but that just becomes another range to dip by. Again, once you push into the lower Bollinger on gold and silver, that becomes an extremely, extremely large buying opportunity. It does not get to that range very often at all. Same with below the 20 MA. It generally does not trade below this range very often at all. So anytime we're below this range, it's a dip buying opportunity. Now, again, this isn't a meme stock. This isn't something that doesn't have real value. And I know people can say, oh, it's just metal, blah, blah, blah. I don't care. It does hold real value. It's not like a junk company that just has a bunch of money pumped into it, or any one of the number of squeezes or anything we've seen. This is not the same thing. Um, this is a real physical security, and this does have a lot of weight to it. And I don't mean that for a pun, but um, it does fit as well. Gold, silver, precious metals, they do have real value to them. It's not the same as some of these super leveraged stocks or crypto coins or, you know, whatever the majority are trading in. In the silver futures, we see that, again, we did push into that lower Bollinger when we had that really, really deep selling to the 63. That became a very, great buying opportunity. There was a whole, I want to say, so a whole $11 upside. No, I miscounted that. A whole $14 upside from where that purchase was. So very, very, that's really awesome. And that's currently if you're just basically buying that the low range and selling right at where we're trading at currently. That's not accounting for it pulling all the way back up to that 86 range. That would have been a whole $26 of upside from buying that lower Bollinger. So lower Bollinger buys are always very, very strong. Buying below the 20 MA is very strong as well. Again, silver does not like to trade below the 20 MA very often, and our upside is a lot larger than our downside currently. If you think about silver, and I've been buying silver for, geez, I want to say at least 6 years now, and I know that's not a super long time compared to some of the silver traders and precious metal traders out there, but we all have to start somewhere, right? But when I was originally buying ounces of silver, it was anywhere from 25 to 33 roughly an ounce. Um, that's about half of the current price. Okay. Um, could I risk half the current price to, potentially buy more of a dip? Yeah, absolutely. However, what was the upside from the current price? Almost a whole $60 from here. Okay. Um, that's worth a lot more. I like to chase that upside, especially when I do think that there's still a significant amount of weight, not just within silver, but within the entirety of precious metals. So, yes, we're seeing some selling within it, but I would still be trying to buy this dip. This is something that a lot of people will look back on and really regret not buying. I won't be one of those people because I will be buying it. Now, TLT, I would not be buying this just yet. We can see some upside, so if you're scalping, look for continued bullish structure, and you can just continue going from gap to gap and following that bullish structure upward. So the 91 range looks very good. So if you wanted to take a cheap scalp for that, that would be totally reasonable, but treasuries are pretty extended right now, and the overall technicals, it's pushed well above the upper Bollinger on the daily time frame. On the weekly time frame, I believe it's above the upper Bollinger as well. Nope, it's not above the upper Bollinger. It left the upper Bollinger, and it's starting to climb back up there again. So, seeing a lot of weight into treasuries, but again, I do think a large majority of that is the Bank of Japan. So, going over this in totality very, very quickly, we are bullet or we are bearish, because again, there's a lot of bearish structure. We are seeing a lot of signals that the Bank of Japan is not done unwinding positions currently, and because of that, we do have to follow the trend. If the trend's going to be selling downward, we're going to follow that downward trend, and we will buy into the lower Bollinger Day 2 trades because we know that there is, very, very large upside from those trades. So that's the thesis. I am bullish in the grand scheme of the market. I wish people want to call me right now. I am bullish in the grand scheme of the market, but in the short term, we are within a sell-off. We are seeing volatility extremely high. So, be prepared for that. With that said, I will talk to you all in the morning with the stream. Again, I stream from 8 a.m. until about 9:30 to 10:30 a.m. Uh, during the trading session, or the actual trading sessions. So hopefully some of you can join me for that. We've been having fairly good scalps. There is one trading day where we did have a couple scalps not do not so well, but for the most part, the entirety of that week we did have the vast majority of positions do very, very good. Anyway, I'll stop rambling. I hope you all have a great day, great night, trade safe, and I will talk to you in the next video. Thank you, as always, for watching.